I am uncertain about its performance in the coming 3 months, but I am optimistic when looking at it from a 2, 5, or even 10-year perspective. For quite some time, I had serious doubts about the asset. What if there's a better currency out there, or if the whole market becomes too saturated? I couldn't help but wonder. But when I investigated the technology and the reasoning behind its creation, I saw the network effects materialize. My structural positive stance on it dates back to the beginning of 2020. Even now, more than 4 years later, that remains true. In the world of Bitcoin and cryptocurrencies, Lyn Alden holds a prominent position as an investment strategist and macro analyst. Alden explains difficult subjects for a large audience and is famous for her superb grasp of macroeconomic concerns and how they affect asset values and the economy as a whole. Through her tweets, papers, and interviews, she skillfully conveys her extensive knowledge of Bitcoin and blockchain technology, which is enhanced by her unique background in both engineering and finance. Alden delves into the problems of the world's financial system in her 2023 book, Broken Money: Why Our System is Failing Us and How We Can Fix It. She emphasizes how the system enriches the wealthiest 1% while billions of people live in poverty. Paradoxes of our current age are highlighted by her. Our monetary system is troublesome and out of date, even if we have abundant energy and technical developments. The fast depreciation and limited international acceptability of the world's many currencies, as Alden points out, provide for a financial system that functions similarly to a barter system. This approach, she says, renders saving money pointless, particularly for people who were born in the wrong nations. Life is championed by sound money, Alden thinks. We need a new monetary system that prioritizes scarcity, deflation, decentralization, and easy digital payments rather than one that is dependent on debt and prone to inflation. Bitcoin, with its unique qualities, is ideal for this plan. In his oblique macroeconomic prediction, Alden believes that the world is going towards a Bitcoin standard period defined by large global acceptance and a significant increase in its value thanks to the expanding popularity of Bitcoin. In her most recent interview with Professor Ji-I Shiyu, she goes into additional detail about her thoughts on Bitcoin, stablecoins, and the cryptocurrency sector as a whole. This leads us to the second and third challenges of our centralized money system. So, the United States has had a pretty good 50 years or so. We have a lot of investment options, and the value of our currency declines slowly. Whereas when you consider Egypt as an example, you won't find the SP 500 or any other solid investment vehicle for wealth creation on their stock market. Real estate is in their possession, but it isn't exactly a liquid asset, so there are a lot of negative aspects to that. They clearly aren't able to put money into their own currency in an amount that is substantial due to the fact that over a 50-year period, inflation averages double digits. So what stablecoinage like Bitcoin do is allow you to transmit money to an institution that holds dollars or T-bills, for instance. After that, they'll hand you tokens that can be exchanged for those dollars, at least by major businesses. Consequently, they function similarly to digital banknotes. They can still be traded around even by smaller businesses without the authority to redeem them. The USD's primary strength is that it provides a safe haven for nations that have long sought a more stable currency than their own, one that isn't as susceptible to market fluctuations as gold or Bitcoin. With just a smartphone, they may get their hands on cash in a more convenient and digital format. Therefore, they enjoy enormous popularity in Argentina, Lebanon, and Nigeria. There are more or less 160 different currencies in circulation today. In a way, they're all monopolies in the center. You must have faith in the government and the Nigerian central bank to manage their currency if you are in Nigeria. Because, well, there's only so much money you can bring in or out of an airport. The borders are quite strictly regulated. Bank transactions are highly regulated and frequently executed using manipulated exchange rates, drastically different from the real market value of that currency. Furthermore, stablecoins and Bitcoin allow me to pay a graphic designer in Nigeria in any currency she desires. For example, if she shows me a QR code during a video conference, one option would be for her to request Bitcoin. One option would be to request dollar stablecoins. She receives it via the local financial system. She can then utilize that in a peer-to-peer setting. It will be hers to take with her if she ever decides to leave Nigeria. By breaking away from her monetary monopoly, she essentially gains greater control over her spending. One such version is Bitcoin, which is completely decentralized and has an infinite supply. It lacks a core hub, making it the one that isn't. The increased volatility and lack of clarity over its value in, say, a 1 or 2 year period are the things you must contend with. The main drawback of stablecoins is their complete centralization. Somebody or some organization is in possession of the assets. Belief in them is essential. You must have faith in their capacity to function inside their regulatory framework as well. My preferred way of putting it is that they act as offshore bank. He accounts for the middle class and working class as well as the rich. They essentially reduce the administrative burden of managing a system where citizens may have doubts about their government's capacity to manage the currency, as is the case in Argentina. You might be wary of banks because of their checkered history of returning customers' funds. What they mean is that they are willing to trust this offshore organization with minor quantities of operating money. On the other hand, I fail to perceive any practical application of Bitcoin for a modern American. Of course, one feature of money is that it is something you own, regardless of whether you plan to spend it or not. From a historical perspective, that is where money originated. Therefore, if we own a gold coin, for instance, we probably won't be using it to make jewelry or fuel our factories anytime soon, but we do so with the understanding that it serves a purpose for other people. Worth keeping. Also, I completely agree with you that Americans rarely have problems paying bills or even saving money. Trustworthy savings vehicles are plenty. However, when considering its potential utility for billions of people globally, it becomes clear that half of the world is subject to authoritarianism, while the other half experiences multiple hyperinflations and persistent double-digit inflation. Many Americans see Bitcoin primarily as an investment. Over the past 3, 5, or 10 years, it has beaten practically every market index, including the S&P 500 and the NASDAQ, with the exception of Nvidia. In light of this, I can see why people in the West tend to view it as an investment. But every one of those boundaries causes friction. In places like Latin America, where there are over 30 currencies, or Africa, where there are around 40 currencies, it is not a good idea to own most of those currencies. It's an investment for those who can see the value in it, even if it doesn't directly impact them, because it serves a purpose for them. Based on what we've discussed so far, I believe that we are experiencing more structurally high inflation. However, that does not imply that they must occur in a flash, eventually come to a close. Looking at the big picture, the Congressional Budget Office projects a net Treasury issue of $20 trillion over the next decade. There will be no recessions, they predict. Therefore, that figure is likely to be larger in the event of recessions. Typically, they fail to hit the target. So, in a cautious estimate, we can assume that $20 trillion worth of treasuries will be issued. Looking at the amount of gold that will be mined in the next decade at the current price, it's close to 2.5 trillion. Given the present price of Bitcoin, the total supply is estimated to be around 70 billion. Gold and Bitcoin, of course, can adjust their prices to accommodate additional inflows if that is what people choose. However, the main idea is that if you're essentially asking, what rare item would I like to own? Of course, solid stocks are a possibility. One of the choices could be high quality real estate. One of the choices has always been art, particularly for rich investors. Another is Bitcoin, because it has a lower rate of new supply growth than many other types of liquid assets, is portable, fungible, and liquid overall. In some nations, it could be seen as a lifeline, but from an American point of view, it's usually seen as an investment. Over the next 3 months, I have no idea what it will do, but looking 2, 5, or even 10 years ahead, I'm bullish. I was quite dubious about the asset for a long time. My first thought was, what if another currency turns out to be superior? What if the entire area is so watered down? Since early 2020, when I first noticed the network effects and dug into the technology to understand its design rationale, I've been structurally optimistic on it. Even now, more than 4 years later, that remains true.